Let's do Cecily Ali. I think this is an excellent question. I love this question because although this is not a very long question, it absolutely, look there, it's very short, but it absolutely tests your ability of getting the nitty gritty out of a question, out of a sentence, and convert it into an answer. So, this, according to me, is an excellent, excellent, excellent question. I love this question. Cecily Ali owns a business known as Cecily Silk. The business sells luxurious silk materials to the public and makes wedding gowns that are sold by the sales department to the public. Cecily Silk has two departments. The one department, the sales department, which sells materials, so that's the one, and the wedding gowns, that's also in the sales department. And then we have a production department that makes the wedding gowns. Now, in any question that you're going to do, and any question that you are going to do somewhere in future, guys, as you go along, just picture this whole thing in your mind. Let's see it in your mind. I have on the one side of the shop a production area. What do? They make wedding gowns. On the other side of the shop, what do I have? That is where the sales area is. What do we sell in the sales area? We sell materials and we sell the wedding gowns that we have made in our production area. The wedding gowns are transferred to the sales department at a profit of 10% on cost. So they make there goes the sewing machines, they make the nice wedding dresses, and when they transfer it out to the sales department, they add 10% to the cost price. The accountant is busy preparing the financial statements for the year ended 30 June 2012. On 25 June 2012, the warehouse containing material was flooded as a result of heavy rain. No sales took place from the date of the flood to year end. On 29 June, it was discovered that only 25% of the materials on hand were not damaged and could be sold again at a selling price of 23,709 Rand. So what does this mean? It says only 12% of the materials on hand were not damaged. So that means then by implication that 75% of what? Of the materials were damaged. Okay. At this date, it was also confirmed that the insurance will pay out an amount. Now that will be for the damaged materials. The wedding gowns on hand were not damaged. So the materials, that was damaged, but the wedding gowns was undamaged. Cecily Silk has consistently used a markup of 30% on the cost of material and a markup of 40% on the selling prices used for the gowns for sales to the public. So let's write it down for ourselves. We say, well, on the material, what is our markup percentage? On the material, it's 30% on cost. So it's 100 plus 30 equals 130. And we say on the wedding gowns, what is there our profit formula? They say, well, there we actually base our profit as 40% on the selling price. So then our profit formula would have looked like this. Good. The total transfers of wedding gowns from the production department to the sales department amounted to 52,000 Rand during the year. And that includes the markup of 10%. The total sales of wedding gowns to the public during the year was 36,000 Rand. Good. Now, if they give us a sales figure, and if there's nothing funny going on with the sales of wedding gowns, here we have material, there we have a periodic system. So there's nothing funny going on with the sales of the wedding gowns. We can work out what is our cost of sales. So we take our sales figure of 36,000 and we say, well, we're going to multiply that by 60 divided by 100, so 60%. So cost of sales is going to be 21,600. Okay. Cecily Silk uses the periodic inventory system. The following balances could be ascertained from the trial balance as at 30 June 2012, that is year end, and that is what we are busy with. Now it's all about material. Purchases of material, returns of material, purchases, carriage on the purchases of material. Inventory of material on 1 July 2011, so in the beginning of the year, opening inventory. And now we have inventory of the wedding gowns in the sales department on 1 July. Why did I tell you it's the wedding gowns in the sales department? Because if the wedding gowns is in the sales department, that 6,000 Rand is going to include unrealized profit. Now the sales of material until the date of damage amounted to 201,850. Good. We have the profit formula, don't we? There it is, material, 100 plus 30 equals 130. The material inventory is insured for an amount of 68,000 Rand. Remember, that is here where the problem lied. We have actually had damaged material. 75% of the material on hand at that stage was damaged. During the year, Cecily Silk sold material at a markdown of 20% below cost to get rid of outdated material, and sales of 8,900 Rand were realized. Now guys, here immediately we can say, well, we know that we have to split that 201,850. That 201,850 consists of a portion equal to 8,900 Rand, where the normal profit, what do we call it, a margin calculation did not apply. So 201,850 minus 8,900 gives us a total of 192,950. And we say, well, we can work out cost of sales, because cost of sales on the 8,900 was at cost less 20%. So that means, what is our profit formula there? Let's write it down for ourselves. Cost was 100 then, less 20% of 100 is 20, and that would have equaled 80. So that would have been our profit formula for the 8,900. So to work back to cost of sales here is 8,900 times 100 divided by 80, and that then will give us a total of 11,125. Our normal sales was 192,950. Our profit formula for normal sales for normal sales is, that is 100 divided by 130. Let's do it separately. That will give us cost of sales of 148,423. So now total cost of sales for material equals the 11,125 as well as the 148,423, 159,428. Okay. Now, number one, they want from you, calculate the value of the material and wedding gown inventory at the date of damage. So that is just before this event took place. What was my closing inventory? Now, I wanted to take you to this table format. If you have organized yourself, and if you have a proper idea of how this thing has worked, you said that there was a production area and there was a sales area. And in the sales area, they have sold wedding gowns, which they've made in the production area, and they've sold material. So let's recap again. We said when we transfer the wedding gown from the production area to the sales department, we add 10% profit. The value of wedding gowns transferred from the production area to the sales department for wedding gowns was 52,000 rand, and that included the unrealized profit. Here was our markup percentage, which is 40% on the sales. Good. Our opening balance of our wedding gowns was 6,000 rand, the inflated balance. Then we said we have transferred from the production area 52,000 rand worth of wedding gowns, which will also include the unrealized profit. So we had available to sell 58,000 rand. What was our sales for wedding gowns for the period? And here they've told us the total sales of wedding gowns to the public during the year amounted to 36,000 rand. And here basically we've already worked out our cost of sales on the wedding gowns. It's 36,000 multiplied by 60%. There's our profit formula, which equals then 21,600. So therefore, what is our closing inventory? Opening balance 6,000 plus produced 52,000 less our closing balance will equal then cost of sales of 21,600. So therefore our closing balance must have been 36,400. Now remember that all these figures are inflated figures. They all include the 10% unrealized profit. So at year end we would have had an allowance for unrealized profit based on what? Based on our closing inventory of 36,400. What is included there is a 10% profit. So our allowance for unrealized profit would have been 36,400 multiplied by 10 divided by 110, which gives us 3309. So closing inventory, and that is the first thing that they wanted from us, closing inventory for that period of time equals then 33,091. Good, as it will appear in the statement of financial position. Then we move to the material. We say, well, our opening balance of material inventory on 1 July was 18,900. We bought material for 210,000, less the returns of 5,100, plus the carriage cost of 8,700. Now, if I do that, that is then the amount of material that we had available to sell. What was our cost of sales? And we've already worked that cost of sales out here. Here was our cost of sales. It was the 11,125 plus the 148,423. So the total material cost of sales, 159,428. 159, sorry, 548. 548. There's 423, 548. That's right. Good. So total cost of sales 159,548. So opening inventory plus purchases less closing inventory equals cost of sales. So therefore our balancing figure is our cost of sales. Our closing inventory figure 72,952. So the first part of the question asks you, calculate the value of material and wedding gown inventory at the date of the damage. And that is exactly what we've done. Wedding gowns, 33,091, and then material at the date of the damage, 72,952. Calculate the unrealized profit including in closing inventory. Now there's only unrealized profit on the wedding gowns, and we've already done that. So there it is, 3309. That is then our closing balance for our allowance for unrealized profit. Calculate the amount that Cecily Silk will receive from the insurers as at 29 June 2012. Can you still remember the formula for that? The averaging clause? It is the amount that we are insured for. We are insured for an amount of 51,000 Rand. So it's the insured amount, 68,000 Rand. What was the total value of material just before the date of the damage? 72,952. And what was the actual damage? We said 75% of the materials were damaged, so 75% of the 72,952 that was damaged, and that was that we are actually going to write off. So 68,000 insured amount divided by the closing inventory multiplied by 75% of the 72,952 gives us 54,714. So we can lodge a claim for 51,000 Rand. Provide the journal entry to record the transaction that took place on 29 June 2012. Guys, this might seem to be first semester work, but the bad news is that nothing in accounting is set in stone. You never can walk away from one topic and say, I'm not really done with that, because if the one thing builds on the other thing, builds on the other thing. Nothing prevents us to ask in the second semester all the work that you've done in the first semester. So please don't forget what you've done, because you can be asked to do certain parts of that work again in a test or exam. Right, so the journal entry. Let's have a look at the journal entry that we're going to pass. Well, how much is the insurer going to pay us? 51,000 Rand. So we're going to debit the insurance company 51,000 Rand. What is our actual loss? Our actual loss is 54,714. So we're going to credit inventory with 54,714. The difference then, the 3,714, that will be our loss on inventory. That is an expense item. That will go to our statement of profit and loss, and that is 3,714. This one's statement of financial position, and inventory obviously also statement of financial position. Good. And then I think we are at the last part of the question. On 30 June, the accountant estimated the value at which the remaining material could be sold is 15,500, and that the selling expenses of 600 Rand will be incurred to sell the inventory. So what is the net realizable value? 14,900 Rand. So what we have to go and make sure is we want to see what is the actual value of inventory on hand at this point of time. 40,900 Rand, that is our net realizable value. What is the cost of inventory? Well, we said the total closing value of inventory was 72,952. 25% was not damaged. So the cost price of inventory is still in our books, 18,238 Rand. Therefore, it's clear that we're going to have a net realizable value write-down of 3,338. So in our statement of financial position, on the current assets, we're going to have material, not at the cost price, but at the net realizable value of 14,900. And the wedding gowns now is going to be shown at the net amount there of 33,091. 33,091. They also want you to show what the cost of sales is going to be in the income statement. So cost of sales is going to be the cost of sales on material. Let's work that one out. There's the cost of sales on material, 159,548. And then the cost of sales on our wedding gowns, exclusive or including the unrealized profit if you want to, that was 21,600. But we have to determine what is the unrealized profit that we have to take out of that cost of sales amount regarding the inventory. So how are we going to do that? Now, the easiest is to go and quickly draw yourself a T account. We say that the opening inventory of the wedding gowns was 6,000 Rand, and that included unrealized profit. And remember, we had an allowance account, and then at the credit side on the allowance account, we had 6,000 multiplied by 10 divided by 110, which is 545. And then in this year, we sold those accounts, so we debited the allowance account and we credited our unrealized profit P&L account. So that's a 545. Then they said that they've transferred wedding gowns from the production area to the sales department of 52,000 Rand. And they've told us that that 52,000 Rand includes the unrealized profit. So what was the profit figure included in 52,000? That was the 52,000 multiplied by 10 divided by 110, and that was the debit entry that we passed against finished goods when the transfer took place, and that gives us 4727. Then at year end, we had to create an allowance for unrealized profit again, and that unrealized profit at the year end was 3309. So we credited the allowance account and we debited the unrealized profit P&L account. And the balancing figure on our unrealized P&L account is 1963, and that we have to subtract from our cost of sales figure of 21,600 to get to our actual cost of sales of 19,637. Please go through this question again. Please do this question again. And the second time around when you do that, pull all the information around. Make the picture clear for yourself. Make sure that you really understand what is the information that they give you in all those paragraphs. And make sure that you can see what is happening. When you close your eyes, you must be able to imagine exactly what happens in this entity.